What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is to get you prepared for the week ahead. So I look at events that are coming up, I look at the Fed, I look at upcoming earnings, particularly the ones that I'm looking at. I don't list all the earnings, just to be aware of that. I also do provide daily updates to get you prepared for the following day, as the market does change on a swivel, more so this year than possibly the last couple of years. So with that being said, consider subscribing and go ahead and drop a thumbs up before we get started. Now, I'm going to go ahead and pull this up real quick so we can kind of see what we got going on this week. Now, as far as like data sets, there is a lot of like housing data that comes out this week. And of course, your jobless claims and some other data. But in my opinion, none of the other data matters. Right now, we are pure earnings because we have this little guy, the FOMC meeting, in the following week. And in that next week, we are currently, it's actually funny because this past week we had core CPI and it hit 9.1. Economists came in well below that. They didn't think, they actually thought we hit peak and we're going to come back down, and that was just blown out of the water. We hit 9.1. Now, the biggest concern, we started selling off heavy, but then we kind of held. And my reason why we're holding is because of the fact that we are in earnings mode, and the market wants to try to price in some of that earnings mode. And this has been one of the weakest earnings I've seen in a while. Our pre-earnings runs, especially coming into a week of Tesla. Normally a week of Tesla runs a lot. Now you're talking about a 9.1 core inflation, and then going into a Fed week after this week. So again, on Friday we did get some good customer data as well, that people are starting to spend. That spending hasn't slowed down, but the concern with that is that people are continuing to spend. Savings have been low. People are losing jobs. So how are people affording? Is this all the savings that people had through the pandemic? And now people are starting to lose jobs. The concern is if that is true, are they going to run out of money? If bank credits, if it gets seized or stopped, right, then it could potentially be a big issue because of the fact that the root of inflation is oil. And Putin has a grasp on oil, something we've been talking about. You're seeing the dollar continue to skyrocket. You're seeing other global currencies plummet. Not good signs, big signs of recession, big signs of red flag. I wouldn't say that this is a full-blown reversal. You have to be mindful of that. What my thesis is, I always say you need to come up with your own thesis. Even, watching my videos, I think it's still very important that you still come up with your own thesis because of the fact that right now we're just trying to get the earnings out of the way. If we get a Tesla, which Tesla is on Wednesday, we have ASML before the bell, Tesla in the afternoon. We have Snap on Thursday, and Nflx will be our first one on Tuesday, but they haven't been doing hot in general. So that one's kind of one of those ones that's hit or miss. I don't really trade that one, but it's good to put it up there just to kind of see what's going on. ASML will be really important, especially with TSM doing really well. ASML has a really good setup for a really big move this week if they do good, just like TSM. So that could be a really good play this week. And then again, you got Tesla. Now, if Tesla reports good or potentially misses, there's a potential it could miss with China lockdowns, the continued lockdowns, with inflation. These are all signs of potential, and then the dollar being extremely strong. So exchanging any kind of currency back over into the dollar, you're going to lose a lot of revenue on that aspect just because of the conversion. So being said, it could get really nasty very fast. So be mindful of that. I know people are tired of it. They don't tired of the whole bear market talk and all that kind of stuff. Recession is still very much a fear. You have to realize that if the Fed come in, going back to what I was originally talking about with the Fed, we came in with a core CPI, and then you had the Fed follow up this week. Now you have to remember that the Fed will typically speak a lot before they go into next week, which is a blackout week. So the Fed can't talk to the media because they have the FOMC the following week. So they'll come out and they'll put a bunch of statements out there. Then you have a blackout week, which is this week, and then you have next week's FOMC. So they've been coming out. It was actually funny because they came out and we're talking about, two other Fed members were talking about, no, we're just going to do a 75-point basis move, 100-point basis move. Is it going to happen? And then the following day, you have Bullard come on and say, hey, yo, 100-point basis move is possible. So don't let that surprise you. So these are things you have to understand. I think the Fed will come in at a 100-point basis move. I believe the Fed's objective here is to front run inflation as much as possible. That way it doesn't get carried away, is what they're potentially trying to do. But you have to understand, when they're front running these things, you're going to see a delayed reaction in this. So you're all these major rate increases really fast. You have to understand you're not seeing them right now. You're not going to see them until the next quarter, and then you're going to start seeing how bad it is. You have to understand that Microsoft, Tesla, Google been laying off a lot of other companies. I think Starbucks is closing a bunch of stores. There's a lot of other Rivian is also laying off people. There's a lot of people, big chunks of their department are getting laid off. I know Coinbase, even though cryptocurrencies come way down, Coinbase, I think, laid off, or not, it wasn't Coinbase, it was OpenSea, laid off like 25% of their company, right? There's a lot of layoffs going on. So when you start getting layoffs, you have fear of recession. People aren't going to want to spend. This is why I said we need to be keeping an eye on the consumer, even though it seems like people are purchasing a lot now. That's delayed, right? That's a delayed reaction to what's actually occurring currently right now. So you have to understand that everything that I've been talking about, we might get like another month before you start actually realizing how really bad it is. And so even with the Fed at the 9.1, very concerning, right? We've been raising rates already, and it's not coming down, and it's continuing to go. So my thinking here is that we're going to come in at a 100-point basis move in this next, or they're even saying a minimal. The Fed are saying a minimal 75. With a minimal 75, right? There's a strong possibility could be 100. If we hit 100, in my opinion, we're going to go back down to 36. But and which could lead to panic, right? Once you start flirting with that 36 level, you start getting panic mode, then all logic is out the window. And so that's kind of where I'm sitting. But we have to understand that I think right now we're trying to build a strong rally to cushion when that move comes next week. Again, it's all just my theory. I could be completely wrong on this, but just how I'm piecing this puzzle together. So with all that being said, as far as my watch list, I got SPY 88, Tesla 58, NVIDIA. I like the chips a lot because the TSM did really well. So I want to keep NVIDIA. Looks like it could potentially break out on the daily. It looks really good. Same with ASML, is breaking up, and it's got a bigger potential point move here. Also, it has earnings. So earnings the day after could be potentially really, really lucrative, I think, with a lot of these here. That's why, well, not NVIDIA is not reporting this week, but it will get sentiment play off of ASML. So just keep that in mind. So SPX, this is where we're sitting at. This is what I was kind of concerned about on Friday. I thought we would have actually got rejected really hard and came down. So in my opinion, if we do land back at 38.48 on Monday, we could start really starting to sell back off to this other level around 37.65. The market, I had the 75-point basis move right up here, roughly around that 38.60, kind of where the market is sitting. Now, if we start flirting with a 100-point basis move, I could see us kind of hovering around this 3,800. And that would kind of let us sell off if we needed to sell off to capture the 100-point basis move at 36, or start pushing up a little bit more. If we do come in at 75, I think we could potentially start rallying because we're already sitting at 75, or just, again, potentially sit around 38 waiting for next week. But earnings are really going to matter. What really to be looking at this week is after earnings, say Tesla, for example, because Tesla is always a great example. If Tesla crushes earnings like they strong majority of the time do, now that they've become profitable, is that they start to sell off because there's always something mentioned in the call about potential concerns. And when that happens, if they start selling off, the fact that we have the only pre-earnings run is we had this little short burst and that was it. And then we sold off again. And we had some little short burst again, and then we're kind of really struggling. That in my mind is saying that what's coming next week way outweighs what is happening this week, even if there is a good earnings. Again, I still think we could still potentially push back up to that 3,900 mark and then start selling off once we hit the top trend line. I think we could potentially start selling off again and then try to price that in. Again, my concern is if Tesla starts hitting this, it could be a higher low here too. So this is where it really matters if it does break back below this and start selling. But my real concern is around that 36.54. Again, we break that. That's a really heavy level. And then you start hitting panic levels at that point. Again, I think you're going to need more. If you have a fear of recession, could break panic levels. Just 100. And again, I think if we come in a 100-point basis move, I think you're going to hit panic levels. And again, realize that I think we could get out and not have a recession if the Fed wasn't driving up rates. But that is the only tool that they have. They don't have an actual tool that stops inflation with oil, right? For the supply of oil, they have no control over that. They have some control, they have supply, and that's great for now. It's not going to last forever. You have to understand that. And then once supply starts running out and things supply becomes scarce, right? That's going to be an issue, and then that's going to drive inflation right back up. And so that is the ultimate key. But right now, the only tool they have is to drive up interest rates and understand what it's actually doing is causing a lot of damage to the current market. Like the market will go into recession just because of the Fed. There's no other reason for recession aside from the Fed driving up interest rates to stop people from purchasing is what it's trying to do. How do they stop you from purchasing? By slashing jobs, by stopping projects, by not hiring and people staying out of work and people living off of savings and realizing that people are going to be very, very selective when they're living off of savings and they have nothing else. They have no other income coming in. You're going to have big problems. So with that being said, I mean, we have to see. The biggest thing is how Tesla will play out. The chips, I think, will do well, but if the general market sentiment is selling off, then the chips won't do as well. So we'll have to really see. Like I said, a lot of things do break out. A lot of things have been breaking out, and they just don't play through, right? Like I've talked about how any kind of descending wedge, if you get a breakout, that typically that will be trace at least 75% of that move back, and it's not doing anything. It breaks, and you get one big day pop, and then that's pretty much it. So again, I don't like this thing. It did break and tried to come. It could be retesting this and potentially selling. Again, I think the biggest weight is what the Fed is. Well, obviously, it's what the Fed is going to be doing. So just be mindful of that. So whatever you see this week, definitely be taking profits if we do have a big week of rallying. I think we could potentially rally up to roughly the 39.53 potentially, and then we'll see where the market goes from there. Now, again, I don't think it's going to break this. There's a lot of resistance up here. Really doesn't mean anything. If the market does get hopium, the market can start getting crazy. But also understand that all it's going to take is a 100-point basis move, and this thing's going to correct where it should be at that point. So with that being said, we'll take a look at Bitcoin consolidating just like the market. Again, it's been kind of stair-stepping, long consolidation drop. We got long consolidation drop, long consolidation drop, long consolidation. We're going to drop again is the question. Which I think, I hate to say it, but I really think we're going to, just because of the sediments of the data. The core inflation is not coming down. It's continuing to rise. It's going to force the hand of the Fed. And again, until something happens with oil, that's going to be a continued issue. And something the Fed has addressed is that oil is just, we're going to have higher than normal inflation over the next 2 years or something, I believe is what they were saying. So So aside from that, a good old Tesla is, we have this on our map for next week. We have earnings on Wednesday. I want to see, it's after the bell. So I really want to see how this does play out. It's been playing a really tight range. Again, I don't like the fact the only pre-earnings run we had was this, and then that was it. What might potentially happen is we might wait till after the Fed. If everything goes fine and dandy and great with their earnings, and then we go through the Fed, or this delayed run this tech run might not actually happen till after the Fed, which has happened. We have seen that. But again, I haven't really seen such a weak push. We just had such back-to-back bad news. Like we get one good news and the market rocket, or Tesla rockets, and then one bad news and it just sells off. It plummets. Again, a lot of this has been between Elon and the Twitter stuff as well. Him selling shares didn't help, and then just the overall market sentiment just was not good. So definitely want to see how this plays out after earnings. Definitely going to play that and see. Those are always the best. This is the best time to play, in my opinion, because you get good numbers. As long as the market complies, you can get some really big moves out of this. And even though I only have those couple of ones listed for earnings, there's a lot of earnings going on. So if something comes on my radar, I'll typically put that in my morning calls that I do every morning. So that's something I'm looking at there. Now, the next one I do have is NVIDIA. And NVIDIA, again, TSM has done really well. It is breaking out, but like I said, these haven't played out the greatest. ASML looks a lot like this too, obviously the chips, but if we can break above this 161, I think we can really start getting a nice move back to the upside with chips, primarily NVIDIA. NVIDIA's got a while, but you have to understand that with ASML coming up, TSM doing well, and ASML coming up, if ASML does good, I think you really get some fuel to the upside on this. So just really kind of watching to see what happens. Again, market's really been driven off of hopium. So if there's any kind of positive, even in a negative market, even the numbers, let's talk about even the numbers on Friday, right? Even the consumer numbers we got on Friday, they're horrible. They're still really low and horrible. But the fact that the estimate is so bad anyway, that it's like, oh, we hit estimate or overestimate, so that's a positive. And so that's what you have to understand when the market is so bad, that if you hit expectations, then you're good. If you're over, that's great. So NVIDIA, we'll really want to keep an eye on this and see where it goes. Again, normally this pattern, this would be a huge breakout, but we're just not doing that. So kind of waiting to see what happens there. ASML is another one we got on here. Check out ASML. Same thing. It hasn't really broken out. It's breaking back above this level though. This 474 mark. As long as we can hold above this, I think we can get a nice run up to maybe 515, which would be nice. So you got a nice big move there on ASML. Now this one does lag a little bit. It is the first retest, so that's even like you saw on Tesla, look like a retest. SPX looks like a retest. If this is the retest and we start really selling, we could be in potentially a lot of problems here. Again, it's your first real break. We did break back into the trend. This is one thing I've been talking about. Even if you look at this bottom trend line, if I fixed it, this bottom trend line, like we did break past it. We did try to retest and got rejected, and then we broke back into it. But now you have like a support level here that's now resistance. This thing could get rejected and just start selling. So just an interesting setup. There's a lot of different ways this can go. This is why you can't say it's just going to go up or just going to continue to go down, because if there is hope, if things start to do well, and it's like, okay, well, we're good. All we need is Powell. But the problem is Powell's not on the same page. Powell only cares about inflation. And rightfully so, he needs to be focused on that one thing. But if you focus on inflation, you're going to hurt employment. You hurt employment, you're going to hurt growth. When you start hurting and stunning growth, that's going to start leading to recession, amongst other things. So we will see how we continue to play out. And then one last one, it's not marked on here, but I just do want to bring up the banks, just kind of know where the banks are standing. Did get a break this past week because the earnings, JPM did extremely bad. Again, if we open back below this 111 mark, that is not good. We got a break, and then we get a retest. This is a major retest, and then it really depends on where we land, because if that was the retest and we end up back down here, we're going to do some heavy selling again. So just be mindful of that. We're still not, again, you have to look again at the overall market, right? This is a down, it's a down channel, right? So I was going to say a descending wedge here, but we've had a couple of those, a couple of breakouts, and then just continue to sell off. But you understand that sentiment is bearish, right? And it's been that way since the beginning of the year, and it's going to continue to be that way. And then I think, again, Q3 could Q3 just started because we are reporting Q2 earnings, but Q3 could be the pivotal turnaround. But I think you're still going to see high inflation just because you still have some of the summer months. And then potentially you might see some improvement for Q3, but I think Q4 could be really good. Just have to see how things play out. It really just depends on the whole Russia-Ukraine thing, what happens with oil. Right now, there's still, again, pipelines in Europe are being maintenance right now. There was a 10-day window last week, so roughly I think I have about 5 more days on that, or coming very close, to be honest. So there's a lot of things, a lot of key aspects that are going on right now, that if the one thing goes wrong, it could implode a lot of these things. You definitely have to be careful on what's going on. Again, if you got a 5-10 year horizon, then it really doesn't matter. I think at these levels are great levels. Just be ready for potentially more selling. Very well could sell more. And again, on average, a recession, is at least 40% correction on the general index. We've only almost touched 25% correction on the year. So that's something to keep in mind. It doesn't mean it's going to hit 40%. It doesn't have to. I think there's a lot of things in place now that we don't have. And every major recession we learn, and new policies are put into place to protect us from that. So just understand that we could start running, or we could not. There's a lot of different scenarios here. So with all that being said, go ahead and drop a like button, and I will see you guys on the next one.